Do you want to capitalise on the projected growth opportunities in Brisbane? Streamline Property Buyers are your local area experts with a qualified property investment advisor, licensed builder and rent specialist, making them the most qualified buyers agents in Brisbane. This team know Brisbane property better than anyone else. Find out more at streamlineproperty.com.au.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day guys, welcome to the show. My name is Russ Stevenson. So a bit of a change up this week for the show. I'm also joined by the Partnerships Manager, Tom Gilmore. Tom, welcome to the show, mate.
Yeah, thank you. Good to be here.
Good to have you on. We've got an interesting character in the studio with us today. We had a bit of a quick catch up just outside the podcast room, and we're going to be chatting to Tristan Angelini. He is a 32-year-old Melbourne man. He's got an interesting background in the sense that he grew up out in the sort of western suburbs of Melbourne. He told me he got kicked out of school as well, so we might dig into that a little bit later.
Hopefully my high school teachers are listening.
Yeah, absolutely. So Tristan's amassed a portfolio of 15 properties. He's a family man. He's got one kid, and when he's not sort of following Geelong Football Club or watching Peppa Pig, he is researching. He is neck deep into property. So we're going to have a good chat and a good catch up and sort of find out sort of a bit about your story and a bit about your sort of, I guess, your move forward as well. So welcome to the show.
Thank you for having me on the show, guys.
Excellent. So 15 properties.
Yeah.
Where did it all start? What year did you buy your first?
First property I bought in 2002 was a small block of land in Werribee.
So you went straight into buying land?
Well, I was forced to buy land from my father. So
Okay.
my dad, he basically said, look, if you don't buy this piece of land, I'm going to hold your money on you. So I was only 16 at the time.
Bloody hell.
Yeah, so I saved up a bit of money from my baptisms and working and washing cars and mowing lawns, and I put my deposit on my block of land at that stage.
So that's quite, I mean, look, for most people, you know, just buying a property, be it a one-bedroom, two-bedroom unit or a house, that is daunting enough to sort of, you know, I guess, get their ladder onto the, the foot onto the property ladder.
Right.
To go and buy a block of land, what did you do with that land?
Let it sit there for a little bit until I could save up enough money to build on it.
Okay.
But basically, yeah, I was forced into that position. I mean, back then, in 2002, it was only $70,000, this block of land. But the block of land was a very small block of land back then. Pretty much everybody was saying, nobody can fit a house on that. It was 371 square metres.
Yeah, right.
So, I mean, now everyone's like, well, that's a massive block of land.
Mansion.
You put two townhouses on there now. Right?
And a granny flat.
Yeah, that's right. So, yeah, it was just a sign of the times back then that you couldn't really do much with. But I put a single-story house on there, and
So you're 16, nearly 17 years old.
Yep.
You've managed to obviously save up this money.
Yep.
You know, I'd imagine most of your friends, probably going out, drinking, having a good time, spending it on, be it cars or clothes or whatever else.
Yep.
How did you? Was it your dad's influence that said, you know what? Or was it something that was triggered in you to save that pot of money?
Very much so. It was very ingrained into my DNA. Real estate and property. Coming from migrant backgrounds, they worked very, very hard and saved a lot. And, my dad basically said, old woggy mentalities. They said, buy a house. Don't waste your money, buy a house. And I still went out and enjoyed myself along the way, but, property has always been the backbone of my existence.
Yeah, okay.
Yep.
It sounds like obviously your dad's obviously been, a fairly sort of significant person in terms of this purchase as well. Was there any sort of research? I mean, one of the questions is when you sort of buy your first property is how did you come to buy in that area with that type of property? Why did he say that piece of land right now and it's the one for you?
Because it was cheap at the time. It was a good entry point. It was in the area that we grew up in.
Yeah.
So which
You're
is
familiar with what?
I was familiar with.
Yeah.
And it was right around the corner from where I was living, so it was good.
I think that's how most people start as well. You tend to, buy in your close sort of area, vicinity, that where you are comfortable, sort of which is the right side of the tracks and the wrong side of the tracks, where, people is, things are a bit more desirable, and it's just easier to sort of understand the fabric of that, suburb.
Yep.
But I guess as well, some people nowadays, they're growing up in sort of affluent areas and they want to invest. And I remember when I was being shown around a property way out west, and it was miles away from where I was living in a city, and it seemed like a different world, and I couldn't quite get my head around what I was was buying into. I think that's sort of something that a lot of people have got to really understand is kind of, maybe the first property is not going to be on your doorstep as well.
Absolutely not. I mean, you've got to invest where you can afford for starters. There's no point putting yourself into massive debt or, in a place where you'd like to live. Sometimes you've got to invest where you have to. But at the, certain areas have got a good growth. And that's why I chose that area, because I seen the potential growing up there.
Can I ask, are you still holding on to that property yourself now?
No, I sold that in 2009.
So 7 years on. So it was 2002. Did you say 2002 you purchased?
So I bought the property in 2003. I purchased that property.
Okay.
And then by the time that I paid it off, basically I saved up and I was able to build that house as well. It took me a long time to actually build that house because I had to basically build everything myself. So every single brick in that house I actually touched. I helped my cousin put up the frame. I laid the tiles myself. I done everything myself because
So you had it 5 years in? Was it 5-6 years in?
Yeah, so I finished it in 2006. I then lived in there and then rented it out. Had some mates, rented out some rooms.
Yeah,
just to help pay the mortgage off.
Okay,
and then I sold it in 2009.
Yeah, right.
Wow, jack of all trades and still with good values, and here you are selling it.
Yeah, well, I tried my absolute hardest with everything that you can. You got mates that are apprentices, like, can you help me do the decking? Can you help me lay some tiles? So I had some good friends at that stage, and
that helps. I think kind of leaning on your network is important as well. I renovated some property back in the UK, and mate was a plumber, another mate was a carpet fitter, and sort of leaning on those guys, it does help. A, because they've got your best interests. B, they give you a decent price, and then you can patch them up with a few beers in the pub afterwards. So
exactly right.
It's tapping into extended network is key,
and it's good camaraderie. Having everybody help out, and when they built their house, I was helping them out. So it was good because where I grew up, everyone was tradesmen. No one was in the professional services. Yeah. Everyone was a tradesman. They worked with their hands, farmers or tradesmen.
Did your friends look at you at the time thinking you were mad, or did they go, bloody hell, wish I was doing that?
The culture of my friendship circle were very much, I guess, supportive because that's how they were brought up as well.
Yeah, okay.
But no, they didn't look at me mad. That was everybody's ambition, was to own their own property or eventually get into the property market because it's ingrained.
Yeah.
It's instilled into people's heads.
So you purchased that first property. You've held it for a number of years. You've obviously built it with your own hands. You've lived in there. You've rented some rooms out, and then you've sold it.
Yep.
During that period, did you buy another property? Did you ever hold two in that same time frame?
So no, not in that time. I basically was working at that time for my family business, and I was just delivering tiles. I wasn't doing, that's all I could do. I didn't have no education. I finished at 16. I had to take whatever I could. So basically, after I sold, I decided to put it on the market, and I sold it I think it was 2008, end of 2008 or start of 2009. I sold the house, and then I went over to, I sort of cashed up. So I built the house for 110 grand. I bought the property for 70, and I sold it for 355.
Okay.
So this is pretty good at the age of 22.
Bloody right.
Right.
Yeah.
So I went with some surplus cash. I went overseas, enjoyed myself for a little bit because I did a lot of time.
We'll save that for another podcast.
Yeah, okay. I went overseas, and then I was there for about 3 months, and I seen the global financial crisis and what it done in America.
Yeah, okay.
And I was like, wow, those houses. I stayed at a friend's house, and there was properties that we were driving past, and it was worth $800,000 12 months ago. Now they're selling.
So you were over in the States then, yeah?
Yeah,
right.
I was in California at that time in a place called San Bernardino, and the properties were selling half of its value. So I sort of said to myself, the property market can't keep going up and up and up. So when I got back, the market was actually quite low here in Australia at that time. We didn't really feel it. But that's when I said, okay, cool, I'm going to double down on this. I'm going to invest in some more properties, and that's what I did.
Okay, so it sounds like we're going into a route maybe around in the States, so let's tap into that. But before we do, so I want to tap into obviously sort of your experiences over in the States and how that's obviously sort of, I guess, helped shape your next sort of purchase. Yep. But we'll get to that in just a moment.
Worried about making the wrong choice with your next investment? You're not alone. If you truly want to become the master of your own lifestyle design through real estate, then you need to speak with Buyers Agents, who'll help you acquire cash flow positive properties in high growth areas with value add potential, so you can create more freedom in your life. Visit SPI.
Okay, we're back. So you've been over in the States. You've seen the GFC hit.
Yep.
You've seen properties kind of plummet, from circa $1 million
Yep.
right down. Where's your mindset at now? Where's your headspace? What are you thinking?
And my headspace is, I was very bearish, as in, this property is going to eventually do the same in Australia.
Okay.
But I came back over and I decided to go, just my gut feeling was I seen that the property market was going to bounce back up. And obviously I had a lot of people around me that were seasoned investors, and they said, Tristan, it's not going to stay down for very long. It'll bounce back up.
Yeah, okay.
Now's the best time to buy.
Did you ever consider buying in the States?
Yes, I did. I was looking in places like Texas, but I was just looking. I mean,
Yeah.
my second property, I couldn't go from Werribee to America. I wanted to just go a little bit further out, maybe 2-3 kilometres, not 3,000.
Looking back, do you wish you had, or?
Yeah, I do, but I'm happy that I didn't.
Yeah.
Yep.
It is, and again, that's another big psychological barrier. Is, as we just talked about earlier, investing in your local area that you understand is one thing, but certainly as a second property purchase, buying something overseas where you don't get to see the property, or like I say, you've got to spend a lot of money to go over there and actually view it.
Yep.
It's another level. So okay, so you're now back in Oz. You've done your trip. Yep. Moving into this second property purchase, and we're not going to go through the whole portfolio. We don't have time to go through 15, obviously, but I just wanted to see, because you've done something fairly unusual in buying a piece of land and building your own property. What was the next purchase then?
Next purchase was in the actual, let's call it the business district, or the main street of a place called Werribee, the same town, the same city.
Okay.
Basically what I did was I was just driving around some old properties that were very close to an activity centre, so train station. I was always looking closer to a train station, closer to other amenities, restaurants, bars, schools. And I found 3 different properties within probably a kilometre of each other, and that's when I decided to go for 3 of them after that purchase. So
sorry, to be clear, so you purchased 3 in a row?
Not in a row, but within that area.
Within that area,
I picked 3 houses that I like, with blocks of land that had potential to develop.
Over what period?
12 months.
Over 12 months. So you really went from sort of that first one, make some money, go overseas, come back, and then you've gone within 12 months, bang,
Yep.
3 properties in that
20%
area.
deposit, go to the bank, borrow the rest.
Yeah, okay.
Yep.
And still holding on to those?
One of them I am, yep.
Yeah, okay.
Yep, one of them I am. The other ones I developed and sold off.
Okay.
Yep.
So you've really kind of, what's the background there? Because, most people take one step and then take, a long time to get that second property under your belt. You've gone buying land, building houses, do it myself, developing straight away. What's giving you that confidence to be able to sort of really accelerate a highly skilled area of property investment?
Not scared to fail.
Yeah.
I guess, I haven't been scared of failure because, when I was younger at school, and I was scared to fail. When I first paid off and bought my first house, I guess that's what actually gave me the confidence back to say, if I can do it uneducated at 16, I can do it again. I can keep going.
Yeah, absolutely. And that's, again, another great lesson for people to learn and understand.
Yep.
Again, you don't have to have loads of money and be highly educated and do all of these things to, it's just breaking that fear factor for a lot of people.
Yeah, that's right.
Okay, so you've had an interesting journey. Let's fast forward to where you are today, 15 properties. What are you up to now?
What I'm up to now is I was in the townhouse development and sort of buying land and putting 3 townhouses, 2 townhouses, 4 townhouses. But that market has sort of dried up in the last 2 to 3 years. The mum and dad investors are really getting hit, especially with the new planning scheme and garden space that the planning policies implemented. I've gotten a lot more into childcare space, into disability space, and also.
So as in buying and renovating these things, or building daycare centres?
So we've purchased 3 blocks of land, 3 houses in one area in a growth suburb with growth population, and we're putting a 146 place childcare centre at the moment, and we're partnering with a provider. How
long has that been in the making? To work out the financials, the dynamics of, buying all of that, the demolition of property, building, and then your return on investment for something like that. How long has that taken you to get to that point to go, this is the next purchase for you?
Well, it's taken a good 10 years to get to that stage, but then your appetite just gets bigger, and you're willing to take a risk, I guess, at the end of it. And we see it as a no-brainer. We partnered with some childcare providers. We knew what our guaranteed lease was going to be, secured lease, a 30-year lease, and we purchased. There was 2 blocks of land that we purchased, and we paid market value at the time. but there was one block of land that we needed to make to get more children on. So, because it works on per children, the childcare space.
Yeah.
Right. So the house next door was only 600 square metres. However, we just bought 600 square metres for $450,000. The neighbour just bought the block of land 3 months earlier and paid $450,000. Well, we needed that block of land, so we ended up paying him $600,000 just for that block, and he made
just like that,
$150,000 in 3 months. So, but it was a larger development that we're looking at, a really good space. You feel good about yourself when you're actually putting these deals and these projects together because you know.
Construction underway?
No, we're just about to finalise town planning. We had a town planning meeting the other day, which is interesting. But yeah, we've got everything underway at the moment. So hopefully we get that through in the next month or so, and then we'll start smashing out construction.
Amazing. So when do you sort of see your first sort of childcare kind of centre up and running and people coming through the doors? What's the build time?
The build time on that would be about 9 months.
You got a name for it?
Well, it's under a banner because our partners have about 30 centres.
Right.
So it'll be operating under one of their banners, but we're not sure which one it's going to be yet.
Yeah, okay, fair enough.
Yeah.
That's a very interesting sort of journey you've taken. For people listening out there, what sort of advice if you got somebody sat there kind of, not quite sure, whether they're going to take the plunge into property and get that first purchase, what advice as now a seasoned investor and with your experience would you give people?
I'd just take a risk. Just go for it. Stop twiddling your thumbs and just get into it. Don't analyse it too much. Just get into it.
Yeah.
Just get your hands dirty if you have to and just have a crack.
Yeah, absolutely.
Just do the Australian thing and just have a crack.
What's the long-term goal then? What's after the daycare centre and, what's...
Just the long term is trying to have a good portfolio of properties, passive income. I mean, that's the ultimate goal.
Yeah.
Have a good solid asset base and try and diversify into other regions of the country, then possibly international.
So everything you've got is in Melbourne then? Everything is
in Melbourne.
Yeah. You've never looked elsewhere? You never...
Do you want to look elsewhere is the more important
I do,
question.
But I really want to know a market before I dive into it. Sydney's at the moment scary for me. I don't know it.
So in terms of upskilling yourself to that point where you feel confident to go into another state and invest, what would you do to amass that knowledge?
Submerge myself in that market and really do some research about where it's, jobs, submerge yourself in the data in exactly what's happening in that region. I've purchased some regional Victorian properties in Victoria, great value, great returns, but looking really at that passive income scenario.
Yeah, okay.
I think that's an important thing. Seeing that in America, they concentrate a lot on that passive income.
Yeah.
That higher yielding stuff. Where here, 2 to 3% return on a normal residential property. I don't understand it.
Yeah, right. So if you were to go interstate as well, would you still look at the same level that you're comfortable with in Victoria?
I'd start smaller.
Yeah.
A lot smaller. Different markets are different. The people are different. The jobs are different. The culture's different. You look at our sporting codes just from Melbourne and Sydney. It's too.
Yeah, absolutely. Yeah. I guess how have things changed in terms of sort of your professional network around you that help you facilitate, look after these properties, help you invest in different areas? How has that changed from, that first property to where you are now as well? Has that sort of grown and sort of developed?
Professional network is very important. And, having that system and that team around you is very important as well, because obviously as things get bigger, you need to have more advice. You need to have a good, strong team of lawyers and accountants to help you out along the way too.
Yeah.
So, I heavily rely on them, and also my family members who, my brother, he's very important in my organisation, very organised person. I've got very, very good business partners that I lean on as well from their knowledge, and just mentors in general, people that have been in the industry for a while, just pick their brains.
Yeah, makes a lot of sense. Tom, anything else? Anything else you wanted to cover, or?
No, I am kind of curious a little bit, just because obviously you said you want to submerge yourself into a market before you even consider to start buying anywhere, or even developing anywhere, I should say.
Yep.
Have you ever thought about just reaching out to potentially experts, as you said you surround yourself with now? Do you reach out to experts such as buyers agents or mortgage brokers in the area, or
to be honest,
the guys who have the stats?
It's probably a good thing to do, to be honest with you, the professionals. But I usually do my research myself. That's just how I know how to do it. Just go with my gut instinct, and then if I do, reaching out to one of those, a buyer's agent or a real estate agent. But At the moment, I'm speaking without experience because I've never gone into state.
Yeah,
So my experience is in my state, basically. I'm slowly starting to go regional.
Maybe you'll get to the States one day.
Maybe one day.
give it a bit of time. I've got a few more questions, but we're going to get to that in just a second.
We get it. You're here listening to the Smart Property Investment Show, and you're being interrupted by this ad. We value your ears just as much as your eyeballs, so we'll be quick. Join passionate property investors on Facebook today, and we'll fill your Facebook feed with useful tips and tools, plus free education from industry experts and a tribe of people who get it. Passionate property investors. Find us on Facebook now.
Okay, so before we wrap things up, Tristan, I guess, we want to sort of boil down to some of your sort of top hints, tips, tricks for any of our listeners. Tom, there's an area that you're particularly interested in that you wanted to dig a bit deeper?
Yeah, I just figured, there's quite a few people, as you can imagine, who probably want to take the plunge, much as like you have done, and develop, whether it be into residential or commercial on their own block of land. What are, the top 5, whether they be let's call it the top 5 bugbears and the top 5, positive things coming out of this.
No pressure. You can do 3 as well, by the way.
Cool.
Or just
I don't
one.
know how to count over
just
3.
one.
Okay, so the first one is obviously finding a good site that stacks up, because a lot of the times you're buying off an agent who probably is just trying to sell you the block. He's telling you can put 2 to 3 townhouses on there, and you can't do that. Second one is probably, or rolling on into it, is obviously having your finance together. Obviously, that's the most important one at the moment, making sure that you've got the cash in there, not just the cash to buy the block, but the cash also to develop it as well. Because a lot of people obviously buy, they say, I've got 20% deposit, I can buy it, no problems, I'll just go get the construction finance. Doesn't work like that. You got to put more money in. So that is the second one. The third one, obviously, making sure that you do a correct feasibility study. That's obviously probably the most important one before you even start, to make sure you get your figures right and get your right consultants on board to make sure that you can put on there what your vision is. And obviously you can build what you want there, and then consult with maybe someone in construction that you can build it for that price, and make sure that you can actually make money on it or not lose on it.
Mate, sound advice makes sense. Just go back to that first point that you mentioned in terms of making sure you buy the right piece of land in the right area and it can do what you want it to do. Have you had experiences where you have had agents sort of come in and try and sell you something, you go, actually, you can't go and develop or do what you're saying it can do? Absolutely.
Many times I've been pitched a block of land that was on railway land, and it was over a high-pressured gas pipeline. And for the 3 years prior to this, I had just developed on one. However, we weren't able to get our assets over that easement because it was a high pressure pipeline. So I've had agents come to me and say, that block, you can develop, you can put 8 townhouses on there, it's not a problem. And I turn around and say, no, you can't. Yes, you can. No, you can't. I've been through this. I've experienced it before.
Yeah.
So, yeah.
And I think on face value, most people will trust the agent to go, well, if he's telling me I can build this, eight block of units or whatever it might be, on face value, they go, okay, well, if I can, then I can. What's the process to going, hang on, if you're going to question that, what do you do? What steps do you take?
Consult people that are that can actually advise you properly before you actually commit yourself. That's the best advice. An agent is trying to sell you that property.
Yeah.
They're trying to, make a commission, and that's fine. However, they need to make sure that they do the correct feasibility and due diligence before they can purchase that.
Yeah, mate, perfect. Guys, we're going to have to wrap things up there. I'd like to say a big thank you, Tristan, for coming in and sharing your story with us.
No dramas.
I'm sure, like I say, with what you're doing and sort of also the other properties, we could probably chat for a lot longer. But I think next time we get you back, I'd like to sort of know where things have got, maybe some of the challenges you may or may not be facing with the daycare centre, how that's progressing, and sort of, pick up the chat from there. So, Tristan, thanks for coming in.
Thanks for inviting me, guys. It's been great.
Cheers.
Mate, Tom, thanks for co-hosting with me.
No problem.
Much appreciated. Guys, thanks for joining us today. Make sure you check out all of our other podcasts. We've literally got hundreds of them to choose from, all jam-packed with great insights, tips and strategies designed to help you on your investment journey. Make sure you stay ahead of the pack and make sure you follow us for the latest news and information on our social channels, the usual Facebook, LinkedIn and Twitter. And if you'd like to come on the show, or if you have any feedback, please get in touch at editor@smartpropertyinvestment.com.au. Hope you enjoyed the show. My name is Ross Stevenson. Hope to see you next time.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
If you're a regular listener to the Smart Property Investment Show, then odds are you're already a property fanatic who loves hearing stories on investing from real people, the good, the bad and the ugly. Be with people just like you and join the group Passionate Property Investors on Facebook now. Become part of a community who know what to do and when to do it. And the time to do it is now. Passionate Property Investors. Tribe, tools and tips. Find us on Facebook today.